Think your commercial vehicle is automatically 100% deductible? Commercial vehicle tax deductions do not work like that. And if there's private use, you may also have an FBT issue. Here's the thing. A lot of Aussie business owners assume that because it's a ute, van, or work vehicle, the ATO just lets them claim the lot. That's not how it works. In this video, I'll show you when a commercial vehicle can be claimed, when private use changes the result, and the specific ATO guidance on minor private use for FBT. And later I'll explain when you need a logbook, because that's where people either protect themselves from ATO audit properly or get caught out. Let's start with the big myth. A ute is not automatically 100% deductible. For income tax, you can only claim the business use portion of your vehicle expenses. So if there's private use, your deduction usually needs to be reduced to reflect that business percentage. The ATO's motor vehicle guidance makes that clear. Commercial vehicles like utes are addressed by taxation legislation in the fringe benefits tax legislation, known as FBT, and this applies only to employers. Since a sole trader can't employ himself, the FBT exemption does not apply to sole traders using their own ute for business. Sole traders must complete a logbook, even where business use is 100%. Now, we're taxpayers trading via a company or trust that employ the owners and perhaps other staff. The exemption is covered by the FBT rules. For certain eligible commercial vehicles, private use can be exempt from fringe benefits tax if it's minor, infrequent, and irregular. The ATO says limited private use of an eligible ute, van, or similar vehicle may be exempt from FBT, and its practical compliance approach sets out what that looks like. Here's the specific guidance you need to know. Private use of a commercial vehicle is generally treated as minor, infrequent, and irregular, when travelling between home and work, any diversion on that trip adds no more than 2 kilometres. And other wholly private travel is limited to 1,000 kilometres or less in total per FBT year. And in addition, no return trip for a wholly private purpose exceeds 200 kilometres. That rule is very specific, and that's where most people get it wrong. If you want to read more about the rule, simply Google ATO MT 2024 FBT and you'll find the full ruling. So yes, an eligible commercial vehicle can still be FBT exempt with some private use, but not unlimited private use, not regular family use, not weekend trips all the time. It can't be the household runaround. Once private use goes beyond those limits, the exemption may no longer apply. And don't forget, this FBT concession is about eligible vehicles. That generally includes utilities and panel vans, but the vehicle needs to meet the exemption rules, including being designed to carry a load of at least 1 tonne or otherwise not be principally designed to carry passengers. MT 2024 is specifically about dual cab vehicles. Let me give you an example. Say you've got a dual cab you'd used in your plumbing business. You drive it to and from work, to job sites, and every now and then you stop for a quick personal errand. That might still sit within the ATO's minor private use guidance. But if that same ute is also being used for sport on Saturdays, family trips on Sundays, and regular school drop-offs through the week, that's a different story. This is where the logbook comes in. For income tax deductions, if there is private use and you want to claim the vehicle, you generally need a logbook to support your business use percentage. A logbook is kept for a continuous 12-week period and helps work out the portion of expenses you can claim. So the practical takeaway is this: be honest about private use. Don't assume a ute is 100% deductible. Check whether your vehicle is actually an eligible exempt vehicle for FBT purposes. If there's mixed business and private use, get your records right and keep a logbook where needed. And sole traders, you always need a logbook. This is general advice only, and your exact result depends on the vehicle, how it's used, and whether you're looking at income tax, FBT, or both. If you're already a client, we will discuss this as one of our usual checklist items at tax time, but getting the rules wrong can cost you a lot more. Like the video, subscribe, and drop your question below. I'll see you next time.